Now, you said that the United States holds all the cards in a potential trade war with China. How is this so?
Well, first of all, we're the trade deficit country. Last year, on the merchandise trade deficit was $375.2 billion. Trade deficit countries don't worry too much about trade friction, but it's much more than that. So, for instance, 2016, you had 68.0% of China's overall merchandise trade surplus related to sales to the US. And that number went up last year to 88.8%, showing amazing dependence on the US.
Hmm.
We've got a bigger economy. Our economy is like 19.4 trillion. Theirs, they claim, is 12.8. Big economies push small ones around. And by the way, our economy in reality is growing faster than theirs. And last of all, we've got a stable economy, and China has a fragile one heading to a debt crisis. So I would say that we hold the high cards.
Are you saying that their economy is really not growing at 7 to 9% a year? I mean, heresy you speak. Is that really possible?
Yeah, I mean, the last year for which we have a full set of statistics is 2016, where China claimed 6.7% growth. But in the middle of last year, the World Bank released a chart showing that China was growing at 1.2%. And if you think that's stunningly low, that number is consistent with the single most reliable indicator of Chinese economic activity, which is the consumption of energy.
Mhm.
And in 2016, the consumption of energy grew by only 1.4%. So, we're talking about a Chinese economy that maybe did a little bit better last year, but it's growing at a rate which is less than ours. And so this gap between China and the United States, it's actually getting bigger.